the IFRS. One of the important issues which often being discussed on the convergence of IFRS is the impact of the new accounting standards with respect to property, plant and equipment. And we will discuss today on IAS 16, which deals with property, plant and equipment. What is this actually about? It talks about the initial recognition, it talks about the carrying amount of the assets, then the methods of charging depreciation, and finally derecognition. But what is this property, plant and equipment, and how different is the fixed assets which is already been shown? The property, plant and equipment which is held for the use in the production or a supply of goods or services, or for rentals to others, or for administrative purposes. That's the definition of PPE under the IAS 16. And also the most important thing is is expected that it should be used for more than 1 year. Then only the accounting standard IAS 16 will be applicable. And the other reason which is another issue which affects is when to recognize the assets on the balance sheet. As per the recognition, it says probably the time when the assets will start giving the results, or will the economic benefits will start flowing to the firm, then you have to recognize that. And the cost of the asset will be shown on the balance sheet from that particular date. But what is that cost at which the asset will be recognized? The initial recognition of PPE is at the cost. The cost can be cash or equivalent money paid. The cost may be the fair value of other consideration, or sometime maybe as per the value decided by other IFRS. For example, if I acquire an asset and we are going to pay that money consideration through the shares, then IFRS 2 will be applicable. We will see that in some of other session. But otherwise, for the time being, the IAS 16 says the asset will be recognized at cost or at the fair value at the initial recognition. And what is this cost? The cost may be the purchase price minus or deduct the trade discounts or the rebates. That means don't show the rebates or discounts as an income, but deduct it from the cost, plus all those expenses which are directly attributable to that asset to bring the asset to the working condition, as well as the expenses that you are planning to incur later on to dismantle that asset. So therefore, the cost of an asset is a purchase price plus directly attributable cost plus wherever possible the dismantling cost. The most important contribution of IAS 16 is the subsequent recognition. The IAS 16 gives you two options. One is a cost model, the other is a revaluation model. In cost model, in a subsequent recognition, the asset will be shown at the cost less accumulated depreciation and less the accumulated impairment losses, if any. For depreciation, IAS 16 has very clearly given what is that all about. But for impairment, there is a separate accounting standard, which again we will discuss in one of our future sessions. Whereas in a revaluation model, the asset of a particular class have to be revalued. In other words, all the assets belonging to that class have to be revalued, and the revalued amount should be shown on the balance sheet as and when there is an accumulated depreciation or accumulated impairment should be deducted. That means whether it is a cost model or a revaluation model, the concept of depreciation impairment applies, but the way you determine depreciation or the way you determine impairment may differ. Revaluation, if it happens and there is an accumulated depreciation, what to do with that accumulated depreciation? Should I write it off? Should I proportionally reduce? IAS 16 gives you two different methods of doing that. Either it can be restated proportionately or it can be eliminated completely. Let us take a small example to understand that. Suppose there is a plant and the cost of the plant is 200,000, the accumulated depreciation is 120,000, and the revalued of the plant is 100,000. What will happen? What is IAS 16 says about it? Let us see this. There is a possibility that accumulated depreciation to the extent of 20,000 can be eliminated. The old plant was 200,000. The accumulated depreciation is 120,000. But now the old plant will be shown as 200,000 minus the accumulated depreciation of 100,000. That means I am eliminating a depreciation, accumulated depreciation of 20,000. As a result, the asset will be shown as 100,000, which is same as the revalued amount. The other option available is proportionate reduction. That means I make a change in the value of the asset. I make a change in the value of the accumulated depreciation on the basis of the revalued to the old cost, which is in this case it is 5 by 4 times and 5 by 4 times of the cost and 5 by 4 times of the accumulated depreciation. As a result, once again I can show the value of the asset on the balance sheet at 200,000. So whether I eliminate accumulated depreciation or I make a proportionate adjustment, the value of the asset will be shown as 100,000. So that means as per IAS 16, the accumulated depreciation can be adjusted either proportionately or can be removed or eliminated fully. Revaluation, what to do with that revaluation? There is a possibility that revaluation can increase the value of the asset or decrease. If it increases, it should be shown as an other comprehensive income and adjusted or reflected in the balance sheet as an equity. But if there is a decrease, it should be shown in the income statement. But one has to be careful if there is a revaluation post impairment. For example, in this case, if the plant and property equipment is 500,000, at the year end the value has gone up to 5,500, so there is a revaluation reserve of 500. But the subsequent year, if it comes down to 4,200, then the revaluation reserve will be reduced to the extent of 500 and income statement will show the impairment loss as 800. In the same way, the another important issue under IAS 16 is the depreciation. Depreciation can be shown both under cost to the revaluation, but the most important issue here is what is the method, straight line or diminishing or units of production. It's a decision of the company. Let me take a small example and close my session. If the cost of the plant is 80,000, the life is 4 years, the production is given, the depreciation cost model and the revaluation model, and it also very clearly lays down the process of adjusting the accumulated depreciation if there is a revaluation, and if there is a revaluation and impairment, what is the treatment has been clearly given under IAS 16. The other related issues which we will pick up later is if there is an impairment, what will be the effect? If there is a revaluation and impairment, what will be the effect? Thank you very much.